Hello, this is Joe Pryor, the virtual real estate team in Oklahoma, and I want to talk about interest rates this week. This is something I regularly do because this is of great concern, not just owner occupants, but the investors that I do business with. You know, rates have been extremely high, and the Fed has just been really hardcore about controlling inflation. But a couple of things happened this week that are very, very positive. Number one, the inflation numbers came down lower than expected. This is always a good thing. And because of that reason, there is a lot of optimism that, rates are possibly going to fall sometime next year. But there's no reason to raise rates, which they didn't do in November, but the December meeting is coming up. And the belief right now is there's not anything that's going to go on there. So what we've seen even before this was when you buy down a rate, which you can do with putting some money out to the lender, the amount of points required for a lower loan interest rate reduced itself. But now what's happened, and for a great reason, and that these inflation numbers came in so good, is that, the Fed not moving is making the market confident. That makes people buy treasuries. The 10-year treasury definitely improved dramatically. That makes mortgage-backed securities improve dramatically. So we're seeing interest rates coming down. Now, the second thing that happened this week, and this was just, yesterday from the day that I'm recording this, is that the House actually kicked the can down the road. If they didn't do this, then Saturday, everything expires and all of a sudden the government shuts down. It doesn't mean that essential workers don't come back, but they don't get paid. So if you're flying, TSA is there, but they're not getting paid a dime. So that's what happens, and it causes a tremendous ripple effect. The last time this happened, there was 35 days that the government was down. It cost us, in the end, about $3 billion. So we didn't want that to happen. That caused the market to be buoyed. The stock market certainly has improved in that respect. Again, interest rates are still improving. And so now it's to the Senate. We'll see what the Senate does and make sure that that matches up with the House budget. The House is responsible for putting this budget together. But man, this is just brinksmanship that's just nuts, absolutely insane. What you hope is that these people understand that compromise is what politics is all about. This is money that's already been allocated by both Democrats and Republicans. Hey guys, let's keep this thing going, but now let's have serious discussions about, the deficit and something that we can do about it together. And that's the way that we improve the situation. So this was a good week in the respect that somehow the Republicans got together, combined with the Democrats, got the budget going. Interest rates were reduced mainly because the inflation rate came down. Hopefully that'll happen in the next report. So I think it's really, really good. I love the fourth quarter. I'm going to talk about that in another video about investors. So anyway, I really like to share good news, and this is good news both for investors and people looking to buy their dream home.